And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's Wednesday, May 28th, 2025. Hope you're having a good day. In case you don't know, this is serious talk about everything that affects you. The markets, Washington, D.C., and their interloping, debt and deficits, scams, shams, corruption. You name it, we cover it with no ulterior motive, no agenda, no bias, except you. We're different than what you usually hear, where people are in the tank one way or the other. We'll explain in a second. If you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our Twitter feed, which is now X. And if you don't follow us on X, you should. And if you'd like to email us, all you got to do is be nice and respectful. You completely disagree if you want. Be respectful. Like Tim. I got an email from Tim. We don't do last names here. Gary, I've listened to your radio show for a long time. I've enjoyed the stock ideas and your insight, but I have to tell you I'm done. I've tried, but I can't listen anymore. If I want political news, insight, and opinions, my choices are endless 24/7. I want investment insight like the title of your show alludes to. I'll check back now and then, but for now I'm done listening. Not because I disagree or agree, but that's not why I tune in. When 90% is political opinion and I tune in for investment insight, I feel I'm being duped. So I want to answer that. Number one, we are not 90% political. We're not even close to 90% political. That's number one. Number two is, they forced our hand. When you have this president that has moved the markets, and this is a fair assessment, 3,000 Dow points within an hour, up, and down, on the changing of stance, 3,000 Dow points, we're talking trillions of dollars. We must cover it. When the last president, on purpose, let in 10 million, 12 million, 15 million people open bordering us to Kingdom Come, which has a huge cost on the country, we have to cover it. When the last president did a 1.8 trillion, what they called an Inflation Reduction Act, and then told us, had the grapefruits to tell us there was no inflation reduction in the act, there was just pure spending, we have to cover it. When, over the last 10 years, U.S. federal government tax revenue increased a whopping 60% to over $5 trillion. That's what we sent to them last year. But the government spending increased 95% to over $7 trillion. We are going to discuss it. When this president swore again that he's going to do something about the debt and deficits, and now has boasted about the big, beautiful bill that will guarantee bigger yearly deficits than Joe Biden's, we have to cover it. When the first trillion of our tax dollars every year, and by the way, it looks like it's going to be 1.2, 1.3, maybe even more, trillion goes towards interest, and not the roads and the bridges and the streets and the sidewalks and the airports and the elderly and the young and the infirm and the hungry, but towards interest, we have to cover it. And in case you don't know, it all intertwines. The markets and all this intertwines. When you have a head of a central bank that has no accountability, answers to no one, and he took out a computer and pressed buttons and printed to $9 trillion, taking over the whole bond market, taking interest rates down to zero, where you were able to get a mortgage for under 3%, but get zero on your savings. We have to cover it. We never used to have to. They made us. And we're going to continue. We're going to have the markets meet the economy, meet the government and policies. Some call it politics. I call it policies. And I don't know whether he's mad, Tim, because I have been taken on this president also. I don't know whether he's Republican or Democrat. But to my good buddy Tim, it all matters. It big time matters. That if this president didn't pause those tariffs, we'd be 5,000-6,000 points lower on the Dow right now. I don't think that is conjecture. This president paused and the market bottomed after he crashed it. And in case you do not know, do you know what's actually happening right now? There are many people on Wall Street that are using the term taco with this president. They're making fun of him, this president, on what we told you we thought he was doing. The taco trade. And it didn't have to be. It stands for Trump always chickens out. That's what it stands for. Trump always chickens out. Alluding to what we told you was going on. But we didn't use that term. And that is, he threatens with big tariffs, and then the market crumbles and he gets rid of them. And we told you listen, we're all about fear and greed. He has to get rid of them. He knows that. And of course, he's not going to tell the truth to the investing public or to the public about getting rid of them, but he does. And the problem with all this, that's major tax policy on this country. Not minor, gargantuan. And that's why you saw crazy action both down and up in the markets. And now, unfortunately, you know what they're doing? They're praising that in the last month they brought in $20 billion into the Treasury from tariffs. They're praising it. It's a tax on our companies. He keeps telling us he wants lower taxes. He just taxed our companies $20 billion, and he's getting praised by the peeps because the Treasury got $20 billion. And he had to admit that the BS that China pays for it, he had to get rid of that. He got rid of that. Now we know that our companies pay for those tariffs. So we have to cover it. And we will. While we continue to guide you through the markets like we did for months, giving you what to avoid as the market slowly but surely dissipated, leading to a good drop, leading to the crash. And who had you? Well, you had to decide what you wanted to do, but who was telling you to be out? That was us. So we will continue to meet the markets and what emanates out of that crazy world of Washington, D.C. that is murdering us. Each and every one of them in different ways. And I appreciate, Tim, for your email. I really do. And completely respect your decision and hope you continue to listen. And that's that. Hey, so it's the market's closed, and I believe we are waiting for NVIDIA to report. They have not reported yet, I don't believe. The stock is drifting a little higher, but I don't see a report just yet. I do want to say Salesforce.com, a Dow stock and a very weak software stock, is up $10 in the aftermarket. But I think that's a combination of just how deep the stock has dropped, and we'll see how that goes. And that symbol is CRM. I'm looking for what their number was as I speak to you. Sales were 258 versus 255, so they only beat by a little bit, but I guess the stock's gone from 367 down to 276, so I guess it's going to bounce, and that's good because that's a Dow stock and it's also a software name. Let's see, 258 versus 244, growth not very good. Up next, we'll see if we get the NVIDIA numbers, the rest of the market. Yeah, we do markets here. I'm Gary. This is the one and only Investor's Edge. Welcome once again to Investor's Edge. So, rough finish today. Didn't see any news. By the way, every time we have a bad day now, my peeps send me emails and texts. Did he say anything today? That's what it's come to. Dow is down 244, S&P 33, NASDAQ 98, NASDAQ 197, SOX 26, transports 163. Just turned into a weak day by the close. Nothing really redeeming. Advanced declines 11 to 30 on the New York, 13 to 29 on the NASDAQ. So that wasn't too good. Small and mid caps still ain't going. Bitcoin pulled back. Remember what we said? Bitcoin broke out of range. Let me see if it's failed that yet. No, it has not. Well, it's a little bit below the highs of December and January, but it seems to me that $60 break below would negate for now. That's on the IBIT. And the GBTC, that would have to break, probably about 83. It closed at 84.31. That would be the Bitcoin. And just I'm looking through my screens. Lots of red. Nothing really redeeming today. And I'm always looking for something. And we'll leave it at that. And again, we will have, I think, NVIDIA before we shut the show off. As we move to other things, but don't see it as of yet, and we have no idea what they report, what the earnings and sales are going to be, but we do know something. I take that back. We do think something. You know what we used to tell you about Apple? Not now, but years ago. They sandbag. Every quarter they give guidance. And they always gave guidance big time below what they knew. They lied. But that's not illegal to give lowered guidance. In other words, at worst you're going to do $1.10 and you tell them 95. Or you guide them to 95 and then you do $1.25. Oh, we beat the pants off it. I'm just letting you know, I'm looking at the guidance for NVIDIA. It looks very low. It looks very low. It looks like a sandbag. No, really, it really looks like a sandbag. That's just an opinion of mine. Hope you don't mind. And again, if they report before we're out of here, we'll let you know. What else today? Anything else? Yields were up a little bit, and they're kind of tracing out range bound. 10-year yield has been pretty much since October between 4 and 4.8 on the 10-year, but really 4.1 to 4.7. It did one little visit to 4.8 and came right back down, and went a little bit below 4 and right back above 4.1. So 4.1 to 4.7, and we don't mind that. I can tell you that flat out. We like when the bond market's quiet. And do you know why it's quieter these days? Because Mr. Bubble is quieter. Jay Powell. And why do you need a quiet bond market? Because insanity. Remember he took rates down to 3%? The mortgage rates, you at 3% and less? You know what ended up happening? I called the 3.7. Who the hell is going to sell a house with a 3% mortgage knowing the next house it's going to be 7%? No, thank you. And that's why so many people were loath to put houses up for sale. And that's what forced prices up. But now, guess what? Distortions end. And now inventory across the country is spiked in many cities. And prices are coming down for a lot of resales. And I'm seeing a lot of pending sales not getting done. Pending sales not getting done. And we look at a bunch of different areas. I was just looking at Raleigh, North Carolina today. Every day I'm looking at Florida areas. And man, oh man, there's some stuff coming down. But the good news is, off of what we call fantasy land pricing. You got people putting up homes that were $1.5 million 2 years ago for $3 million. And all of a sudden, 3 months later, 2.5, they change it. They drop, and then they drop again, and then they pull the house if it doesn't sell, or they keep lowering till it does sell. And of course, you know what one of the worst acting groups in the market has been? The housing stocks. They have been in the bear market for quite a while now, with nary a bounce. And by the way, we've been telling you to avoid that group, and rightfully so. Part of what we do here. And we'll continue to do as we move forward. The rest of the week, well, I told you what's reporting, but Costco is going to be reporting. That's important. Best Buy, important. Burlington, important. Dell Computer, well, is it called Dell now? Important. A few others. We shall let you know. With no agenda, bias, or ulterior motive as we move forward. But again, the big key right now, I think a big thing going on that will have an effect is what we are getting out of that wonderful place in D.C. We have found out that this administration and the House bill did not include Doge. So all the reporting by me every day about what Doge is cutting or whatever, nah, they did no cuts. And Elon Musk is even pissed off. So, deficits as far as the eyes can see as we move forward, unfortunately, ladies and gentlemen. And I have a lot of other things I can complain about, but I think maybe I'll wait till tomorrow on that. We're watching major indices here very closely now. First off, want to mention it again. We think small caps, no reason. No reason. I know we hear about diversification and own a piece of this, a piece of that. All I can tell you, it remains a very large cap market. And if you go look where the IWM is versus the SPY, it's night and day. It's like my Knicks against the Pacers right now. By the way, my Knicks lost last night. When you give up 130 points, you're going to lose the game. Got to play better defense. Up next, this, that, and the other thing, whatever else. I'm Gary. This is the one and only Investor's Edge. I was watching some peeps today. I saw one guaranteeing we are going to break the old highs and go even further. And he gave some target or something, whatever. We're just letting you know the thought process for us is quite simple. If that's going to happen, we'll let it happen. And we won't argue the point. It's simple as that. The S&P high was 61.47. Looks like late February. Hit 61.28 in January. A breakthrough there would be just terrific. Probably going to take more time, and you will need more participation. You'll also need the banks to do better. They've come up like anything else. They'll need to continue to do better and better and better. We think they're that important. So instead of having to predict, we'll let the market decide. The S&P will first have to go through the highs of last week of 59.68. Closed at 58.88. And then it'll make an attempt higher. And then we'll take it from there. On the NASDAQ, pretty simple. If we're going to take out the highs, the first thing you got to do is take out that 19.2 and change. You closed at 19.1. And then you hit 20,204 in December, 20,118 in January, and 20,110 in February. You'll have to take that out. And if we do, we'll know it. We don't have to predict it. The NASDAQ 100, kind of like the NASDAQ, you're going to have to take out 22222. 22222. Yeah, 5 twos. And if that occurs, we'll know it because we'll see it. And we are now pretty much under the impression. Do you know what I've actually done at night? From the day we had the crash of those tariffs, which were changed on that Monday, even though they moved it to Wednesday because it was leaked, I'm pretty much putting the lows of the market not at the 16.5 on the NASDAQ 100, but I'm pretty much at the 19.1, 19.2. Because we crashed from that 19.1, 19.2 in 2 days from that tariff craze. And that's going to change things. That to me was a big tariff craze washout. And if I look at the S&P and do the same thing, the S&P low 55, 5600. Not the 4,800 that we went to. Why? It was a 2-day crash because of tariffs that were never going to be put on. Or, I take that back. I think wanted to be put on, but the market crash forced them to get rid of them. And please do not believe anybody in the administration from the head honcho down that the reason why they paused is because we got better negotiate. The market was crashing. What's the old line? Don't wee down my back and tell me it's raining. So I actually am drawing a line around 55, 5600. I think that would have been the low. And the market got surprised by what he did. NVIDIA reported. I've got it. Let me make sure I got this. I'm showing 138.50 in the aftermarket. Actually, it's moving all over the place. Now it's 138. Closed at 134.81, I believe. I'm not sure where we closed, actually. Yeah, 134.80. So we're up about $3 and change in the aftermarket. Maybe $4. And that's helping futures on the NASDAQ up. They're still down for the day, but up. And let's see what they reported, NVIDIA. 81 versus the 73. Yeah. They only beat by a little bit on sales, which are up like 67%. But beat by a good 10%. The sandbag. And we'll see what the market decides to do overnight, because the CEO will speak and he'll say nothing bad. And it's good to see that it's up. It's an important stock. The QQQ, which was down, closed at 518.91. I got it at 520.91, so it's up about $2 in the aftermarket. And by the way, as I mentioned, the small cap Russell 2000, it's down 7.3% this year. The S&P's flat. There you go. Why own the weakest? Just to diversify? No thanks. Not for me. So we'll see what NVIDIA does overnight. It's lighting up like a pinball machine here. I will tell you, if it closes right where it is right now, 138, let's call it 139, it would still be below the highs of last June, which was not the all-time high, and would still be about 9% below the highs of November and January. How can that be? You're told it's the greatest ever. It's got a $3.3 trillion market cap. It's tough to move it, and it's going to be a lot tougher to grow their business. A lot tougher. By the way, it just went from 139 down to 137.5. Welcome to my world, ladies and gentlemen. Your NVIDIA. And again, I must tell you, if it ever decides to break out of this 1 year range, I will be jumping all over it with big dollars. But I think we got plenty of time before it decides to do that. That's what I'm thinking. I'm also interested in seeing their CapEx talk, capital expenditures, because that'll affect the equipment makers. That will be of interest to me. But that'll be later, and this show will be over by then. But good to see it's up after a icky day today in the markets. Couple other things we're watching closely. Remember I mentioned the 10-year yield? Well, it's been range bound. I don't want to see it go through 4.66. I think that could have repercussions. Even bigger at 4.8. But we're not even close. Yet. And of course, rates come down good. Rates go up not so good. That's the cost of your capital. It's the cost of your loans. That's the cost of your mortgages. And that's just for everybody all the way down. Next thing I got to look tonight, what happened to these software stocks today? They crumbled a few today. And I don't see any news as of yet. Dang. But Salesforce.com may help tomorrow. Only up $7 in the aftermarket now. Was up 12. And there's a little bit of your market for you. Gold. Still fine. Normal pullback. I said a couple of weeks ago I think we go range bound, and we're now in 1, 2, 3, 4, 5. This is the 6th week of range bound, but above moving averages and acting just fine. The gold miners, yeah, acting just fine. No complaints. And where it stops beats the heck out of me. Just one big gigantic breakout, all-time high breakout back in, when was that? I gotta find it. March of 24. Up next, we'll think of something. I'm Gary. This is the one and only Investor's Edge. Da-da-da. Okay. Well, this goes back. I said to you earlier, for some reason, Synopsys dropped. $50 today before earnings. And another stock, Cadence Design Systems, dropped $35 today. Very heavy volume on both. They are both software companies. Computer software design platform types. This is what I am getting now. Trade restrictions out of the Trump administrations with China. And you want to know why we have to discuss Washington, D.C.? There's just a lot of going on, a lot of moving parts. Imagine you owned Cadence Design System today. I don't. The stock was back near the highs of the year. And within, well, it started at 3:14 p.m. and crashed. 10% in 46 minutes is a crash, right? Because Washington, D.C. made a decision. By the way, we're not saying they're right or wrong with reporting the news. But this is what we mean by we have to discuss what else. Need I say more? In the news, just a few tidbits. Miami. They're calling the drop in real estate prices in Miami housing market as breathtaking. Spiraling number of home buyers pulling out of deals. Inventory flooding the market. Prices being slashed. Sales stalling. Just letting you know. This is what's going on. And I do believe it has to do with prices being too high over time. Hey, in the news, let me let you know that there's been a shocking discovery in Antarctica that researchers from a couple of universities found Antarctica suddenly reversed its decades-long trend of melting and has gained record amounts of ice in the last few years. Boy, where's Al Gore reporting that? In the news, Toyota. I have a Toyota. I have a Highlander. And every time I get picked up by Uber or Lyft, it seems to be a Toyota Highlander. They have a warning for car buyers. The popular product's about to get more expensive. Their chief operating officer said the company is planning price hikes in response to President Trump's 25% tariff on imported vehicles and parts. He said business is not sustainable longer term without significant price increases. No kidding. No kidding. So there's your little Toyota. Yeah, we can stop there and we'll do the short shrift. In the news, well, Biden, I wish his health to be very well. We don't wish any bad on anybody in their health. Just want to let you know, Joe Biden took $100 billion of our tax dollars and shoved them out the door in the final few weeks of his administration and gave that money to donors and friends and his peeps for those climate things. Remember, we told you 3 years ago, once they announced that Inflation Reduction Act, that a bunch of Dems were going to run to Delaware and open up these non-government organizations that don't pay taxes, all based on climate, and then they're going to have their hands out and they're going to get all that money. And they did. You can go read up about Stacey Abrams, and I'm sure she was on TV the other day, and the interviewer on that crappy channel did not ask her, how much money did you make? What's your net worth? Huh? He's a sleazebag. Joe Biden, one of the great sleazebags ever in D.C. And I know I'm going to get on the Trump thing because of what's going on with him. We're going to discuss a little bit of that tomorrow. Trump and money. In the news. And this is what we want you to be careful about, because there are people out there that are calling for mass layoffs and recessions and stagflation and depressions and all kinds of crap. I just would like to let you know there is absolutely no chance of a recession or a depression or the like unless the market says so. You got that? The market has never missed a recession in front of the recession. In other words, in 3 or 4 months, if we're going to have a good downturn, the market will crap out now. It's usually about, I don't know, a few months in advance, and I'm just not seeing it yet. So I just want to let you know. Simple as that. I've been always amazed about all these predictions, and all these people would have to do is follow the market. Watch Caterpillar and United Rentals and Deere. Watch the rails and truckers, which, by the way, have been weak anyhow. And watch the market. It'll predict a big downturn. That's how it rolls. That all said, you have a great evening. Drive carefully. NVIDIA's almost 140 in the aftermarket right now. Of course, the CEO is probably speaking, saying great things. So it's up about $5 in the aftermarket, and it'll remain range-bound. We'll see how it goes overnight. When you get home, do like we do. Quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Thanks for joining. Peace out all. Good night.